So let's talk about 3 stocks today that are a buy and 1 stock that is a complete bail on and run away from. And unfortunately, I'm sure this is going to make a lot of you guys mad. So today we're going to talk about Amazon, Apple, Google, and Tesla and get into what Wall Street thinks you should do with each one, whether you should buy or sell the stock. And of course, I'll give you my thoughts on what Wall Street's thinking as well, which of course sometimes I agree, sometimes I totally disagree. So I'll give you my thoughts on what Wall Street's saying. I'll let you know whether I agree, whether or not I disagree, exactly why they're saying it, and everything else. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Sorry, sometimes what I say makes you guys upset. I don't know how else to bring it outside of the truth without the hype, so that's once again what we're going to do here. All right, so you guys know it. I like to call out Wall Street whenever they're full of crap, and occasionally they kind of say something that kind of makes sense. And it's something that we absolutely should listen to. So once again, here we are. We're looking at something. We're talking about Amazon, Apple, Google, and Tesla, whether or not they're a buy or a run from, essentially. I believe they call it bail. Yeah, bail here in regards to the segment here. So let's look at each one and see exactly where they fall. And I'll give you my thoughts on each one of the stocks as well and what I would do.
After those runs, Apple, Amazon, and Tesla all have relative strength indices over 70, indicating they're short-term overbought, but 2 of them are still a buy for our trader. Let's find out which ones in 3 buys and a bail. Here to do the honors is Lee Munson. He's president and CIO of Portfolio Wealth Advisors. Lee,
all right. I don't know about you guys, but that hair is awesome. I have no idea. I mean, he looks, could be right around my age or so, given the gray that's in there, but man, I'm kind of jealous. I can't lie. I wish I had hair like that. As you guys can tell, I clearly don't. And yeah, I know it's kind of silly at my age to probably have hair like that, but I don't know. If I had that much hair, I might do something ridiculous like that because, I don't know. I had hair. But anyways, back to the movie.
Tackling a big one here, and we appreciate that. So this is 3 buys and 1 bail in mega cap tech for you. And your first buy is Amazon, which has been outpacing Apple and Alphabet by more than 12 points this year. AWS is doubling down on AI chips, heavily marketing them to other companies. What makes you so excited about this stock here?
Everything makes me excited. We found out over the last year that they're making a lot more money sending us all those cardboard boxes that they make out. They're making marginal incremental money selling ads. And while that might pressure Google a little bit, I think that that's going to continue.
All right. So I definitely agree there. And I like the 3 points that are up there on the board because sometimes I feel like Amazon sometimes gets glossed over. It's just not as flashy as an Nvidia. Obviously, it hasn't had the same type run. Of course, it's not a retail favorite like Tesla is or one of those. Palantir, obviously, here lately. So what I love about Amazon right there is kind of doing it. Amazon makes more delivering cardboard boxes than it admits. Yeah, they've always kind of slow played that part of their business. For AWS, it's about the future of sorting data for AI platforms. I remember when they started playing around with AWS and started saying that they were, moving forward with that project. They were laughed at. They were like, what is Amazon doing? They have lost their mind. Nobody's going to use AWS. And here they are. It's just a beast and one of the biggest profit drivers for Amazon just a few short years later there. So it shows you they can execute on whatever the heck they want on a very high level, even things that seem outside of their kind of circle of competence, kind of what they do. Amazon can absolutely do it and turn it into a huge profit center. And they've done it again and again and again. And that's why I don't discount side projects that they're working on. Everybody kind of goes, oh yeah, they're into that space, but this, that, and the other. And then before you know it, they're one of the leaders in the space. And they don't need to be the top dog in order for it to generate a ton of profit for Amazon to that bottom line. So that's, another thing that I just love about what they're doing. And of course, this is a long-term secular story, of course. Does anybody think Amazon in 5 years is going to be smaller than it is right now? I think that's a definitive no. Everybody's going to continue to use Amazon more and more and more over the coming years, over the coming decades. They're just that incredible at it. And it's virtually impossible to build out the infrastructure and all the other things needed in order to compete with Amazon on that level. So it's an incredible business model there, I would agree. And then, of course, ad sales, something else that everybody kind of said, why is Amazon doing that? Why? Yeah, they may make a little bit of money, but not a lot of money. Well, guess what? There's so many people on Amazon all the time that ad sales are doing very well. And that is another huge profit center. Obviously, it's not pure profit, but it's mostly pure profit there. Just talk to Amazon talk to Facebook or Google in regards to that, in regards to how much money you can make in regards to ad sales there. So all the way around, those are all things for me that make me very, very bullish on Amazon long-term. And when I look at valuation, Amazon's always traded extremely expensive, but secondarily, that's they're not trading expensive relative to their past history. So it tells me there's a lot more room to run. And a lot of these products like AWS are just now gaining big momentum in terms of EPS down to that bottom line there. And so that's another thing that tells me, hey, Amazon tends to do these legs up for, a period of year, 2 years, 3 years, whatever the case is, before finally kind of plateauing where they start piling money back into the business, kind of preparing for that next leg up. That's just how Amazon kind of trades. And right now we're in one of those big uptrends, and I'm still very, very bullish on it. And until we see some of their core businesses start to slow down a little bit and some of that CapEx really, really, kind of head through the roof per se, where Wall Street starts going, oh, they're spending too much on CapEx, they're spending too much on this, that, and the other. Until we kind of see that, Amazon's going to continue to deliver to that bottom line for the foreseeable future. So yes, I'm very, very bullish on the stock as well.
So Amazon really represents those retail marketplace sellers paying Amazon much more money to access AI and all the things AI can do to help them sell more crap to Americans and for us to keep hitting that buy it now button. So I think Amazon is a retail story, and I think that everything that has to do with the cloud is going to continue growing, and it's going to be able to bring that AI to smaller and mid-sized businesses and retail sellers. That's why I love it.
Yeah, a lot of people, I think, agree with you and say they're now going to be able to just offer this as a bolt-on product. Granted, we're still talking about the cloud, and a lot of this could be on-prem, but there's a huge demand there as well. Let's move along to Apple, Lee, which is fresh off a 9-day streak of intraday highs and recently announced they're buying those Amazon AI chips we were just talking about. Apple's up 28% this year. Why are you a buyer here?
I reluctantly say I'm a buyer. I mean, I certainly won't sell it, but here's the deal. If you're going to buy high-priced, big mega cap stocks, Apple's going to be one of them. I'm sitting around.
Now, for me, I've been saying Apple's overvalued, but I understand where he's going with this. Now, so for me personally right now, I'm not buying at these levels. One, I have plenty of Apple. I have no need for it. And two, obviously, as you can see, there was much better opportunities for entry earlier on in the year, just kind of like we talked about at the beginning of the year here. I thought it was going to be one of the big, not gainers. Obviously, I had no idea Palantir was going to do what it was and such, but I definitely thought Apple had a big year coming as it was getting beaten down. So it was getting beaten down there, as you can see at the beginning of the year there. And then all of a sudden, basically right as summer was getting ready to start, springtime there, it was kind of at those lows of 170 range or so. And now here we up almost to 250, just a short time later here in under a year. And that's not us retail pushing that particular stock. That is big institutional funds putting money into that stock. And Apple has kind of almost become the de facto go-to for, hey, we just want to put our money in a safe place and get a nice yield. That's kind of what Apple has kind of turned into for the time being over the past couple of years or so at that institutional level. So whenever you kind of see that, although I may not want to necessarily buy it at these levels, I definitely see why he's saying what he's saying, because that's exactly what institutional owners are saying right now. They're like, hey, we don't really like the valuation, but it's not crazy. We're not trading at a forward PE of 300 or anything like that, like some of our other favorites are right now. Obviously, you're not getting the same growth either. Everybody understands that. But nonetheless, Apple seems like a safe bet, especially with the business kind of being in a trough right now. They're able to kind of pull themselves out of that trough. You may get some decent returns on the back end. Now, obviously, you're not 10xing on Apple or anything of that nature at this particular stage, but that's also not why a lot of folks are buying the stock either. So I kind of see his point right there where he's going.
My new laptops for Jesus, my analyst, and my kids. We're buying all the new stuff because I want to have that new OS. I want to be able to have the watered down AI version that Apple is providing for that. We talked about this summer about this huge refresh cycle that's going to happen someday for Apple when AI sort of gets there. The refresh happening now. Right now, people want to get these new OSs to take advantage of whatever it is Apple's going to sell us into the new year. It's just expensive, and you know what? You can't get 10% solid earnings on a stock like Apple for, under 30 plus earnings. It's just not where the market is right now. So you're going to have to pay up.
I just look at it as a $3.75 trillion market cap, Lee. And I guess it goes to 4, maybe 4.5. I don't know, 5.
I'm right there with you with being nervous about it. But the problem is I'm going to keep if I keep buying these laptops, and these phones, how is this stock going to go down? Valuations don't matter until we have inflation or recession. I hate that reality too, but it's what I live in.
Yeah. I'm going to call BS on that one there. Valuations always matter. Valuation, of course, in the short term, stocks can get stupid. Agree there completely, but valuations always matter, and they don't wait for inflation or a recession or something else like that in order to beat a stock down. Trust me, they will run it as far as they feel they can run it, and basically to the overvalued side. So when you're kind of thinking of a stock line here, I'll see if I can draw the chart the right way for you guys out there. It doesn't go up like this over time. It kind of does this number. And so right here, if this is kind of fair value, as assuming that they're growing earnings and everything else, so you're continuing to have the valuation go up, up, up. And it just kind of, Wall Street likes to run them up, way overvalued. They don't wait for a recession to beat it down. They'll go until they feel like that trade is done anymore and they want to run to another trade. And then at that stage, all of a sudden they'll say, ooh, valuation's really stretched. Ooh, this, that, and the other. And they'll beat it way down. And it'll come way down to undervalued at that stage. And then that right there is where I like to buy. And of course, then magically it'll be like, oh, Apple's a steal deal. Oh, this is happening. That's happening. Even if it happened 6 months or a year, 2 years ago, doesn't matter. The point being, they'll come up with their reasons to trade it back up, and then the run starts back up again. They don't wait for recessions or inflation or anything else of that nature, because that would take forever if you really tried to wait for those type things to happen. Understand we've had kind of a weird past 4 years or so in regards to a lot of goofy things happening. But generally speaking, that's not how it works. It'll just take the fear of a recession or one bad number over here that can send a stock right back down to fair value, not actual recessions, not actual inflation like we've got the past couple of years or so. So yeah, that's just Wall Streeters talking Wall Street BS there, trying to justify large moves up.
Very quotable. All right, let's move along to Alphabet then, which is up 9% this week. After they announced Willow, that breakthrough quantum chip, they can do computations in minutes that they say would take a supercomputer S10 septillions of years to do. And, people are excitedly now about a lot of the tools in Gemini and so forth that they've been able to unveil.
Everybody likes to rip on Google because they're always like second place in implementation, second, third place in cloud. They're known as the company that always executes second best. But here's the thing. If you want to win the Tour de France, just come in fourth place on every single race and you will win the championship, right? And so Google is that same way.
Actually, not a bad analogy there. And more importantly, in order to be a great stock, you don't need to be number one at everything. Sorry, you can be the second best, in some cases even the third best, or fourth best or fifth best, depending upon the market and the type of what you're looking at there. And you're still going to do just fine from a stock perspective. Not every stock is going to be NVIDIA. Not every stock is going to have a run up like Palantir's had, over the past few months. You don't need that sort of stuff in order to be a great stock and a great company long term. And more importantly, a lot of these things are narrative based. They are the best at search and have been forever. I mean, you don't Bing things, you don't, Yahoo things, you Google things. That's how far into the lexicon of, culture and everything else it's woven into. And despite their demise, and I've been hearing about the demise of Google search for, it seems like a decade now. Every single time there's something new that comes up, something changes. They give a terrible result or whatever the case is, and all of a sudden they're dead, but yet they're not. I would agree in terms of the, large language models and some of the other things like that. It appeared that they were behind, but really nobody's figured out how to monetize it yet. So are you actually behind if nobody's making significant amount of money to their bottom line with these particular products? I don't think that you are. That means we're still early in this race, and I don't count the race done until the end. And oh, by the way, I think with all the AI stuff, there's going to be multiple winners, multiple. Like 5, 10, 15, maybe even 20, 25 different winners when this is all said and done a decade or two from now, when this is all fully integrated into everything. And I'm okay if Google isn't number one. I feel it's still a great company, and I'm going to make a lot of money if they happen to be number 2 or number 3 or number 4 or number 5 or whatever the number ends up being. So a lot of this, and I hate it because there's certain YouTubers that push this, and obviously a lot of the CNBC folks push this, that there's got to be one winner, and there's only going to be one winner, and it's a winner take all, and all this other crap like that. And it's like, that's never been how business works in the vast majority of sectors. Sure, there are some sectors where that absolutely ends up being the case, but in general, overall, and especially on something as big as AI, where we don't even have it really defined yet, much less, what can be monetized, what's going to be worth more, what's going to be more profit to the bottom line. Nobody knows any of that yet. So to say it's a winner take all type scenario is just simply guessing and speculating. And more importantly, who's going to be the big winner is simply guessing and speculating. And I just know that if I'm betting, I'm going to bet on the horses with the best talent, with the most amount of money to throw at it, and with the infrastructure and a lot of other things in place in order to continue to push the envelope and figure this thing out and create an avenue to create a lot of profit. And I think Google fits that perfectly. That's why I'm invested in it. That's why I continue to buy it. And I really still like the valuation of Google, despite the little bit of run of it it's had here lately. Obviously, I was liking it a lot better when we were buying it down, in the 150, 160 range or so earlier this year. But hey, you can't be picky about it. Yes, it's run up. But again, I still think it's not at a bad price in regards to valuation or anything else of that nature. Still undervalued.
I think Gemini's had it. It's got bad press from the Olympic ads things, and people want to bag on it. More people are looking at Gemini and happy with the effect than on Chat GPT. Everybody is getting used to the idea of what Gemini is. And most importantly, Google figured out to have Gemini link back to sponsored content. The cash cow keeps going. Antitrust don't care. The quantum chips, that doesn't mean a lot to me, but it's all positive PR. Google needs it. It's cheap. And I love cheap cash cows.
This guy's funny. But I can't disagree with him either. I don't care about the Justice Department stuff. That's par for the course for all big tech. It just happens to be Google's turn. Okay, cool. And I also agree with the quantum computing thing that I'm not as worried about it because until we see it draw profits to the bottom, I'm not saying it's not positive. It is positive. But, how much is it going to draw to the bottom line? We don't really know yet. And is it this thing to where all of a sudden it's going to add, $25 trillion to the market cap? No. Uh, that's silly at that stage. However, it does put them in the fight in regards to that. And more importantly, it is going to add something and it creates some buzz around the stock as well to at least show, hey, Google is stepping outside of their norm and doing a lot of other things. And let's see if they can be successful or not. Obviously, that remains to be seen. So that's kind of the reason why I think he said it, and me too. Even if it's not successful, the valuation's still cheap and they're still a cash cow. Like you just saw, they're figuring out how to monetize their actual AI content that they're putting out there, linking back to their original sponsor source, a lot of other things of that nature. We can debate whether that's right, wrong, all you want. As a shareholder, I like it. So, in the end, sometimes when we're discussing, necessarily what you like in regards to your search versus what's making the money, you got to kind of differentiate the two there and understand sometimes you've got to do some things in order to make money that, maybe if it was my own personal choice, I would do it a different way. But you're also not trying to run a business and trying to create as much revenue as possible to the bottom line for investors like myself as well. So great points there, even though he said it a little bit in a funny way. I like it.
So then that brings us to your bail. Those were your three buys. You're bailing on Tesla, though. Why?
I hate the product. My analyst Jesus and I, we went out to go see an Iron Maiden, and in San Diego, I rented a Tesla to check it out. Everything about that car I hate. Every general manager, some of them are clients that run auto dealerships. You can make a lot of money doing auto dealerships, let me tell you. They all say the same thing. People are coming in and saying, is it morally okay if I switch back to gas? Because people don't want electric cars, they want a Tesla. It's an old design. It's up 50% since the election. I'm sorry. Elon Musk is going to make bank hanging out being a bro with Trump on SpaceX. Tesla is a car company. It's not a tech company. When I say valuations don't matter, there's a line in the sand, and Tesla just crossed it. So I'm not in it.
I know plenty of disgruntled Tesla owners, Lee, but...
All right, so we'll kind of address that part here and let these guys finish up. I guess it's cool he's going to Iron Maiden concert. I'd like to go to Iron Maiden concert. But in regards to the product itself, it seems to be a love or hate kind of thing. People absolutely that are Tesla owners. Obviously, we have a lot of folks in my group that are Tesla owners. Absolutely love it. 100% sold. Wouldn't drive anything else. And I know other folks that are also in our group that have owned and immediately regretted and kind of had a similar experience to what he said as well. I personally have ridden in many Teslas. I have driven a few. I have, seen FSD in real life. A lot of you guys say, oh, you've never done FSD. You've never done this, that, and the other. Yeah, I have. And I've done it recently as well. It's an incredible product. The first time it happened to me, actually, I was with another buddy of mine who had one way back 2016. He actually engaged, that version of FSD, and it was incredible. It was navigating cones. It was really, really, really a unique driving experience. That doesn't mean that all of a sudden everybody's going to want it and it's automatically going to add $1 trillion market cap there. I know plenty of people, or actually I know more people because my age bracket, that I tend to be around tends to be older, that even if they, like Elon Musk and they like Tesla, they want nothing to do with FSD. They don't want cars on the road that aren't being controlled by individuals. Doesn't matter whether it's safer or not. They just don't trust it. It's just kind of one of those big hurdles that they've got to get over. And my opinion on a product, or your opinion on a product, or anybody else's opinion on a product doesn't really matter. What matters is the bottom line and those financial results. And right now, Tesla seems to be very, very divided. You either love it or you get into it and you don't like the vehicle at all. I don't know why it's so divided. My personal take was the technology was incredible. The build quality of the vehicles, and I have been in a S Plaid, S, X, Y, and a 3. Actually, I have a buddy that owns 3 of the 4. And it's just him and his wife. If that tells you what sort of Tesla fanatic he is. And he even complains about the quality of the vehicles and such. And especially whenever I start comparing, like the S Plaid to a Porsche Taycan, which, yes, I agree, the Tesla actually performs better, but the fit, finish, everything else inside that Taycan, it's a Porsche. It obviously feels like luxury inside. The S Plaid just feels like a little bit of a souped up Tesla there. Now, again, that's my opinion. Obviously, opinions differ from that. I'm not saying that being right or wrong, but I do believe that's why there's still a divide there, and we got to kind of close that back gap. I also know that's why I love the fact that Tesla going down market is the play to be in, because those type things won't matter as much when you start getting into those lower price vehicles. That's why I love the move down to that lower price vehicle there. So for now, Tesla seems to be divided in regards to it running up 50% after the election. I don't freaking care. Notice the way he said valuations don't matter in one sentence, in regards to, until we get a recession or, high inflation, valuations don't matter. But then with Tesla, it does matter. It's kind of like, okay, all right, it tells you kind of where the trade is moving there at that stage. Plenty of stocks have had big runs that have no relation to the election whatsoever once we kind of got the election results and kind of got through it. So I think we're kind of reaching here on a lot of these points. Maybe some bias coming out there politically. Who knows? I'm not here to call anybody out. You guys know I don't do politics. I don't care about any of that sort of stuff. In regards to the run, what I care about in the end is valuation. And we'll talk about Tesla's valuation here once we kind of wrap up this part of the video. So let's kind of see what else they got to say.
Do you not see how we're quickly moving to Robotech? Now, it might still be 6 or 12 or whatever months away, but they have to be in the pole position for what driving is going to look like eventually over the next 10, 15, or 20 years, don't you think?
15 or 20 years, but I'll wait for those earnings to come. When you're at, 130, 150, I don't even, the PE doesn't even make any sense right now. Robo taxis, all that stuff is going to take a long time. You're going to beat up, just like with green energy, into rules, regulations, state, municipal. I think it's going to be much more than. Why do we not have hover cars? Walt Disney promised me hover cars by 1985. I think this robo-taxi thing is far away, and I think that the regulation is going to kill them.
It's time to book you a Waymo. I want you in a Waymo the next time you show up here. I want your experience. I am a little bit too. Lee, thank you so much for joining us today. Appreciate.
All right, there you go. So right there at the end, they both kind of told you they're kind of afraid of autonomous driving and other things of that nature. And that's kind of where I'm going at. And notice they were talking about a Waymo and they were afraid. So it's a thing that I think is just going to take time. I don't agree with his opinion on valuation. Again, we'll talk about Tesla's valuation here in just a second. Don't agree with that particular piece at all. However, the robo-taxi piece being, closer to 5 to 10 years away versus next year, 100% agree. I know folks always go into the comments, oh, but next year, Austin and, LA and a couple other places are going to start. And it's like, that's great. Notice those periods, what time will take years just until they get approval. We're talking about big money to the bottom line that people are somehow wanting to pay for right now. I agree with him. I don't need to wait until it hits the bottom line, but I need to move past speculation, because right now we have no clue what the demand will actually be for that product. And the regulatory process, we have no clue whether that's going to be a 3-year process, a 5-year process, a 10-year process. And same exact thing with, do people want it or not? I agree. It is the future out there. And if you were to tell me in 20 years, do you think it'll be something that's commonplace and normal on the road? Absolutely, I agree. But I am not paying for that 20-year future today, and neither is any large Wall Street investor. And that's the problem whenever Tesla hits that $1 trillion plus market cap. It's great on one hand. On the other hand, you need big institutional buyers to come in and buy that stock. This is not Tesla back in 2019, 2020, where retail, where it's basically a solid mid-cap stock. It blew straight through mid-cap all the way up to mega-cap. And at the mega-cap level, you have to have institutional buyers coming in and buying that stock. And institutional buyers do not pay 5 years in advance, 10 years in advance for earnings. They just don't do it. As a matter of fact, your PE tends to move down the further up the scale you go, because they get more and more conservative as you kind of grow into those type big market caps and those type valuations. They're just not willing to pay as much as you think that they are. So if you think, big money sitting out there going, man, we're going to pay a 300 PE for Tesla, that's just going to be the norm. You don't understand how those guys work at all. unfortunately. So in regards to that type thing, that's kind of my thoughts there in Robotaxi. You guys already know that. I'm sure somebody's going to go down and blast me in the comments saying, no, it's going to come in 6 months and the robots will also be here in 6 months and other goofy stuff like that. Okay. Okay. I hope so. I stand to win. I own a lot of Tesla. I bought it a couple times this year already. Hey, I win regardless. So I hope that happens. Now, in regards to the valuation right now, where I disagree with him is it's not crazy overvalued right now. I agree it was undervalued before the run happened, right? Absolutely. Now that the run happened, yeah, it's overvalued, but we're not talking crazy. This is not Tesla 2021 overvalued. This is not we pulled 2 years worth of the future into now. I agree. Elon kind of tipped his hat a little bit in regards to, hey, I think I'm going to guide to 30% next year. In regards to getting back to positive growth rates again. So a lot of the run up has included that. So whenever he does announce that, next quarter earnings there, we won't get the same pop that we've had because it's already had a nice run up. But you have that new model coming out and it's a cheaper model, which to me is right in Tesla's niche. That is where they're going to make their most amount of money. And it's something that they're going to release now. This isn't, Optimus. That could be, 5 years or a decade away. It's not Robotaxi, which is a big unknown right now. This is something that is known, we can tangibly look at, and I can tangibly see it's going to sell, it's going to do well. Now, how well, we'll see. But in regards to being able to pay a little bit of a premium for Tesla, if you don't already have a full position out, like if you're DCAing right now, I would just continue my DCA because whenever those type things get announced and they start actually bringing in profits, that right there is whenever we could see more momentum go in the stock long term. Now, of course, where's it going to go in the short term? Who freaking knows? It's Wall Street. For all I know, they all thinking like this guy, and they're going, "Hey, just wait till we decided to take our profits, and get our big fat bonuses from running Tesla up, and they're going to beat it back down, to under 400 again." I don't know, just as likely as the run continues, kind of depending upon what he says on guidance and a lot of other things of that nature. It's Tesla. It runs wild. That's why I say it's really, really hard to predict what it does. Why don't I just set price targets and I stay patient and I buy whenever my price targets hit? That's how I have a massive Tesla position at a very, very, very low cost basis because I'm just patient with this stock because nothing moves like Tesla. But I disagree with his take that it's just at some crazy valuation right now. Although it is overvalued, it's not at some crazy level to where all of a sudden he's, just fine paying ridiculous multiples over here for one stock, but then over here with Tesla, it's just out of control and ridiculous. Not true either. So this is kind of the way Wall Street works. And you got to kind of understand that, especially when you're dealing with stocks like Tesla. And remember, if you want more information like this, make sure you check out the pinned comment down there for my group. I may have left something special for those of you guys that hung around this late in the video. So check out the pinned comment there if you want to learn how to do evaluation. You want to learn and see all my buy and sell alerts in real time. See my complete watch list with price targets. You want to take 5 courses for free, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there, guys. There's so much involved. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.